Welcome to our weekly Forex forecast. As always, we need to point out that trading Forex is a risky endeavor and not suitable for all investors. My name is Jay Norris, and I've written a couple of books on trading which were published by McGraw-Hill and which serve as the textbooks for our courses. And I'm also the Director of Education at Trading University. First market we'll cover will be the Australian US dollar. Australian USD held up pretty good last week in the face of some pretty serious stock market weakness. We see that weakness in the markets last week as a correction. Australian dollar held up pretty well, though. Our biggest concern, however, is that day-to-day pattern is still down. Yeah, it did hold up. However, we're concerned if you do see a continuation of the correction which started last week in the stock market, and you're seeing dollar strength also. We're just a little bit leery about this guy because when you did have an uptrend, you had a downtrend in the dollar, you had strength in the currencies. Aussie really couldn't power through that significant level. So yeah, it's stronger. It's almost taking on a flight to quality role. We wouldn't mind seeing that. It's still fresh in our minds, this volatility back here. And, we thought it got, this was a little spooky. It came down awful hard in the late summer, early fall last year. And then the spring sell-off came to mind, too. You could have made a case here for the market holding up pretty well, everything relative to everything else here. And back here, same thing. But then, when everything did start to calm down, or you had a little bit more of a shakeout in the financial markets, the Aussie really came down hard. So that's my concern. I still like Aussie dollar overall. You have to like a market where both the primary and secondary pattern up, but it's hard to like it too much, hard to lay down with it given that that day-to-day pattern is down. So we'll have to watch that. That could change if the correction in the financial markets we saw envelop this week following the U.S. presidential election, if that comes to an end, if that's short-lived, and then you're able to close above that day-to-day pattern, that'd be great. I'll definitely be cheerleading it. But, I'm not as bowled up as the pattern would leave me to believe, and I think that's just seeing the macro picture overall. So Aussie dollar looks good, though, held up great all week. I think you have to take a hard look at Aussie yen longer term. Maybe not yet, though. Let's see how far this correction that started in the U.S. stock market has to blow through the financials. I'm also a little bit leery being short dollar there against the Aussie, if you're long Aussie dollar, short U.S. dollar, because the dollar index is comprised of 60%, almost 60% of the Euro-U.S. dollar. Euro-U.S. dollar, on the other hand, finally chipping through our day-to-day support here, and it was kind of odd that I know the day-to-day was down in the Aussie but up in the Euro, but it is, though, and you're parked right on top of it. It's pretty good analysts out there calling for more downside in the Euro. If it chips to that level, I agree. I think you will see it. As it stands right now, just looking at our pattern ratio, how we look at, here's how we view markets. You take those patterns in the middle there, kind of the meat in the middle we call it. You can see the area I've highlighted, and the majority of patterns are down. So we're already highlighting sell signals. We're already looking for sell setups, sell signals. So pretty good downside here. Really good market last week to be trading from the short side, obviously. So we'd like to see a continuation of that, and there's the possibility this move accelerates once you get below that level there. So we're still all about selling rallies in the Euro. I like taking sell signals short term in the Euro. Not sure if you get to that level, not sure what kind of rallies you'll get anymore. If you see an acceleration lower on that, you just may want to maintain shorts and hang on. Maybe take a sell signal on the intraday, put that stop in, and just let it go. Try to manage it on a higher time frame. But we think for sure if you get a close or two, a couple closes below that green line right there, right around 127 even, you probably see an acceleration of that down move. We're already all about selling rallies in this market. I think we've highlighted it a couple times in the past couple of months that you have had sell signals here in our method. Sell signals basically a change of direction on the daily in line with that primary pattern. So our method already have you short longer term, definitely short from a swing trader and a day trader too. So there you have it. What more do you need? Really, you're selling this guy on all cylinders now. Let's just hope we get, it continues to trade back and forth. We continue to get rallies to sell as short-term traders. Next market, we'll take a look at the pound dollar. And this guy just slipped into the bear camp for us. It had been neutral. It was bullish in here. It was even bullish down in here for the most part. But now it's shifted neutral early in the week, and now you're downright bearish. You got to close below. So here you actually shifted that day-to-day pattern. We'll need to roll that up now. That day-to-day pattern probably somewhere up in here maybe. So that's gone. Support's gone. And there's a shift for us. We'll shift that green line. That's orange now. So day-to-day is now down. We like pound overall because if you can see, hopefully you can see the primary. Well, I had to take my word for it. The primary's up. The secondary's also up. And now, however, the day-to-day pattern's down. So you may be in for more of a correction now in line with that stock market sell-off. Also, the financial market's kind of taking it on the chin all week. And he had a little bit of recovery Friday. I think that's more of a kind of a dead cat bounce. You could be in for a little bit more given the pound now has shifted lower. So pound longer term, we think it's a potential opportunity to buy a dip in here. Unlike the euro, longer term we like the pound. We think they're kind of ahead of the curve as far as their own Keynesian policies to speed things up over there. So we think they are ahead of the pound. They have a couple of advantages over Europe in combating economic slowdown. But near term now, that would be as a swing trader, a day trader, we're working now the short side of the pound. That's a new one for us. I haven't been on the short side of the pound for some time. But longer term, we think it just sets you up. I haven't even looked at a downside target, but I'm thinking you can get in the 56 handle here. Right, test 58, then you get in the potential high to mid 56 handle. So that'll be something that we'll look forward to near term. So pound's on the list, pound on the short list here as far as going after sell signals. There you can see it. Look at that. All those intraday patterns are down. Even when you look at the majority of patterns, when you go up all the way to the longer term patterns and you take the tradable patterns, what we call the tradable from the weekly down to the 15, majority of them are down. So there you go. There you have it. You're working that guy from the short side as a swing trader and a day trader. Let's stick with the dollar yen here too. We talked about this kind of oddball thesis that were kind of put on us by the markets where potentially dollar yen is an alpha market, and you can even see it this week where for the big sell-off in stocks, yen, it wasn't that weak at all. I think month to date you're not even down 0.5%. Yet stock market month to date it's down over 2%. No great shakes, but that points out that yen is pretty stable here. In the past, if you had a pretty serious shakeout sell-off in the U.S. stock market, you would have seen yen a lot stronger, i.e. dollar yen. This chart would have been a lot weaker. You didn't. So, dollar yen held up pretty well. It's holding support right now. And again, that we've kind of, that oddball thesis kind of forced on us that, we could see dollar yen strength longer term. But I think if you do see a continuation in the sell-off, the corrective move we're seeing, and we believe it is a correction, this corrective sell-off, this reactive correction lower in the financial markets, it's going to be awful tough for dollar yen not to follow it. So I think we still could see a bit more yen strength to this. We'll have to hold out. We'll have to see. But nonetheless, dollar yen, they drilled it pretty good this last Thursday right here. But overall, you have to say, hey, this guy's holding up pretty well given weakness in the financial market. So that's something that we're going to watch, and it's really exciting for currency traders too, because if that does come to fruition, in other words, you do get a longer term reversal higher in this market. And here's your weekly chart. You could see you have a higher low right in place in 2012 compared to the 2011 low. If you were to see a continuation of that, you get a full-blown reversal in that market. That may be something to see. We were referring that, if that occurs, we're referring to that as the golden age of currency trading, because that'll really open up some of the other yen pairs. Just as we thought we were going to get there, what happened? You got a correction in the stock market, and I keep referring to that, so let's show that to you. And here it is. There's your correction in the stock market. Spread that out a little bit. primary pattern up, secondary pattern up, but the day-to-day was down. You know, we talked about this last week. The day-to-day was down. Maybe I didn't take that serious enough. That day-to-day pattern, very influential pattern. It's the most influential pattern if you're a swing trader or a day trader. So that day-to-day pattern was down last week. You have to pay heed to that, so you got a big shift here. And here was my point, that's pretty good weakness you've seen in the stock market, pretty good sell-off. Oh, it's serious enough, where it's ended up on headlines, and they're talking quite a bit about it in the financial press. And that's what I was getting at before. You know, dollar yen held up pretty well given the weakness here. But I think this is still your alpha market overall. Certainly on the downside, anytime you have a serious shakeout here, it's going to roll through the currencies, and you're seeing that now. And you know, it was interesting to see pound dollar finally capitulate, give up support. And now the euro also. So I think you're going to see default dollar strength essentially off of this correction. We don't see the correction in the stocks as being too long lived. Here's kind of the last one you had, really May, and that was about it. It lasted for 1 month. So you know, we think you have a little bit more downside here, but overall a lot of cash on the sidelines here, and we think your foreign investors are going to take a hard look at this. As cheap as the dollar still is, especially to Japan, we think that this sell-off will be an opportunity to pick up U.S. shares at a cheaper price, particularly for the Japanese, because longer term they certainly enjoy a very strong currency. Hey, thank you very much. As I said, my name is Jay Norris. I'm the Director of Education at Trading University. There's the site. We always encourage you to come and see us. If you come to our site, trading-u.com, click on market commentary, you'll see this video, you'll see plenty of other videos, you'll see very informative articles on the business that we're in, the trading business. If you click to education here, click on live market analysis, you can come in and see me Monday. See me Monday on November the 12th, and I'll highlight setups and signals in live markets for you. So come to our site, click on education, click on the live market tab, and come and register with us. There you go. You plug in your own username, and then you can come and see us. We'll email you all on Monday, and we'll get you in there, and you can come and see what we're doing. Hey, thank you so much, and we'll catch you next time.